Hey guys, Sierra Bailey here with Accel Commercial Real Estate. The video you're watching ties into our event in June, Accelerate. If you want to learn more about what you see today, scan the QR code on your screen or click the link in the description to get your tickets now before early bird pricing runs out. Enjoy the video.
So the question is, there is a market for buying and selling notes in the residential space. Does that exist in the commercial space, specifically to Fannie and Freddie? So I'm going to anecdotally start off with the answer, or with the answer to the question is, I actually don't know. I think it's a cool question, but I don't know if they sell, if there is a market for reselling dust paper. I think a lot of those notes get sold on mortgages that are maybe in trouble or something like that. And Fannie and Freddie, because of all of the rules that we have, qualifiers, sponsorship, the actual property rules, Fannie and Freddie have a ridiculously low default rate. In fact, to give you an idea of how crazy that is, we have a $45 billion book of agency business. We service $45 billion on behalf of Fannie Mae and Freddie Mac. And in my entire tenure, we have not defaulted on a single loan at Lument in the past 2 years. But I have heard that there was 1 year where we defaulted on 2, and it was a really, really big deal. So this stuff does, doesn't fail. That's the first thing you say when it's about to. But yeah, so the way that these products get built is that it's almost like a chocolate cake. You're essentially combining 4 components to an interest rate. The first is just the natural 10-year treasury. Obviously, anybody can invest their money risk-free for the 10-year treasury. So you automatically have to put that inside of your base layer of your chocolate cake. And then you have your investor spread, which is not really that high, but that sits on top of it. And that piece is sold off as a commercially mortgage-backed security into the market. Now, typically, the primary buyers of that are firms like Goldman Sachs or BlackRock Group or Chase or JP Morgan. But coincidentally, the largest buyer of dust paper in 2020 was the Federal Reserve, which, if you recall what I said from the beginning, that they're under conservatorship, and you kind of wind the clock there, you'll find that the largest buyer of paper that is backed by the federal government was the federal government. So if it ever goes belly up, the good news is the buyer will only owe the seller, which happens to be the same. So and then there's other components, which is guarantee and servicing, which is actually how we make our money. We service loans, and so something that I do as an originator to kind of help attract business is I don't charge an origination fee. So especially in the small loan program, you don't want the deal to get eaten up by fees. So we try and keep really low legal fees. I don't charge an origination fee. We get paid to service the loan. That's how we build our book. That's basically what determines the value of our company. And then there's the guarantee fee, which is what Fannie or Freddie get paid to guarantee the loan, because Fannie and Freddie guarantee that if the loan goes bad, they will pay it. But of course, they're under conservatorship, so that means you're going to pay it. So yeah, I don't know if there's a market to buy that paper. I think if there was, it would basically trade exactly like a bond, because that's exactly what it's turned into, is a commercially mortgage-backed security that's traded as a bond in the open market. But with Fannie, well, actually with Freddie, the answer is definitely no, because they pool all their bonds together and go out once every 2 months in billion-dollar pools and sell it off as it's basically a commercially mortgage-backed security pooled fund. With Fannie, and you guys both transact with Fannie Mae, right? So the bond is purchased in the open market the day that you rate lock, and someone actually purchases that bond that day, and then we package the bond and sell it off, and then Fannie, a month later starts taking over guarantee. But yeah, good question. I wish I knew more about it, but it is really interesting. All right.
That is wonderful. Thank you so much, Trey. We are so grateful for your willingness to share your
your large body of knowledge with us tonight. And I think it's obvious that you know what you're doing. And the other thing that I know about you is that you care about your investors and your long-term relationships with them. I think that is evident in the way that you handle things, and that you try to be really responsive. I think probably the one thing I wanted to just ask you though is there a difference in that big of a difference in this is kind of a self-serving question, but is there that big of a difference in working with different kinds of brokers? And does that matter when
Absolutely. Yeah, no, absolutely it does. And, you know, I promise, you know, Jana didn't pay me to make this plug, but working with Brian and Jana throughout transactions is, you know, like there's very different types of personalities in commercial real estate, and they could vary wildly. But, you know, I always tell people, you know, when they learn about my relationship with Brian and Jana, or you know, we're talking, you know, about different brokers throughout the space here in Middle Tennessee. My favorite thing about Brian and Jana is their connection to their clients in a way that's more than just that singular transaction. Like, you know, the tough part of this business is that, you know, from a lender perspective, you get bogged down in tons of underwriting numbers and deal sizing and extremely active people. And then that kind of reflects inside of the industry, right? That like people are always on the phone, they're banging out emails, they're, you know, and they're quick, and they're, you know, and I work with a lot of New Yorkers, and you know, but always whenever I get on the phone with Brian and Jana, it's always just this, you know, really almost like a sense of nostalgia coming back in and being able to remind me that there's still really good people in this space, and that those relationships are worth fostering. So yeah, to answer your question, there's a significant difference between working, you know, with different folks, and I, you know, for one, have always thoroughly enjoyed the relationship with both of you.
Thank you. That is very, very kind of you.
What are you talking about? People like you.
Well, we are coming up against our time frame here for the evening, and if everyone there could just give Trey a round of applause. Let's.
Thanks for watching this video. If you like what you see, be sure to follow our Generational Wealth Learning series. On select Thursdays, we offer cutting-edge industry information that would normally cost thousands of dollars. And the best part, our education is absolutely free. If you register through our events page, you can join us live, either in person or over Zoom. In the meantime, like this video, comment down below, and subscribe to our channel so you never miss a beat.